It's funny how money changes situation. Miscommunication lead to complication. My emancipation don't fit your equation. I was on the humble, you on every station. Someone play young Lauren like she done. But remember not to game the one.
Thanks, Qua, for that great report. And thanks, Reese, for setting the mood with this Lauryn Hill. I appreciate it. Remember to use the hashtag AskAriel to hear your financial questions answered by our patient investor, Qua. Be sure to follow us on Twitter at UBR1690. Now it's time to acknowledge our social media following, our Facebook likes this week. McGray Victorious, is that a real name? Daniel Robinson, Naima Ward, Darian L. Hills, and James Perryman. Thank you so much for showing us love on Facebook. Be sure to like us on Facebook so you can hear your name live on the show. And up next, we're going to hear from Jamal Jackson, and we're going to talk about crowdfunding. I'm sure everyone is talking about how they want to fund their business in 2016 and get on the right track. Well, Jamal is here to show you how you can go about doing so. For those of you all that don't know, crowdfunding is an online offering for private company securities to a group of people for investment. Because equity crowdfunding involves investment into a commercial enterprise, it is often the subject into securities and financial regulations. Equity crowdfunding is also referred to as crowd investing, investment crowdfunding, or crowd equity. Correct, Jamal?
Yes.
I stole that from Wikipedia, just so everyone knows where the heck I got that information from. And for all you guys that don't know, Jamal is the founder and head principal at Jackson Corporate Law Offices, where they focus on small businesses. Everything that you need to start a small business, from making sure that your business plan is intact, to incorporation, to making sure that you can start up your brick and mortar. This is where you go for all things small business.
All things.
Yes. So tell us in non-wiki words, what is equity crowdfunding?
So, first off, big shout out to the producer for the music selection. Miseducation of Lauryn Hill was one of my favorite albums.
Thank you.
So equity crowdfunding is an offshoot of traditional crowdfunding. So in traditional crowdfunding, you'll put up a campaign. Usually it's for like 30 days. You'll try to raise X amount of dollars. But in traditional crowdfunding, the only thing that you can do is give the people a thank you, write them a nice message, or... Is this not on?
It is. I just wanted you to speak into the mic, but I didn't mean for you to stop talking in the
sorry.
middle of what you were talking about. I was trying to do something on the sly, but that's okay.
So in traditional crowdfunding, you can't give out ownership of your business. But what equity crowdfunding does, it allows you to raise capital in a way that gives people ownership. And there are certain limits, but at the end of the day, it makes it easier for individuals to invest in companies and for companies to receive investment.
So let me get this straight. If I have some dollars, some coins, as they say, Tamar Braxton says this. Yes, I do watch reality television. So if I have coins and I'm like, hey, there's a couple of businesses on 87th Street that need some money, and they're a part of this crowdfunding thing. Me, as an ordinary person, can go and invest in this company, and then I own a piece of it. Is it that simple?
Well, it's from your end. It's pretty much that simple. So the businesses, they have to go and set up on a portal, and there are certain disclosures that they have to make on the portal. Now, you as an individual, yes, you can go on. Now, if your net worth or annual income is under $100,000, then you are limited to either $2,000 or 5% of your net worth or annual income. So of the lesser
Interesting.
So let's say that you make $80,000 a year. Let's say that your net worth is $90,000 a year. You take the lesser of the two, which is the $80,000, and you multiply that by 5%, which gives you $4,000. So you would be able to invest $4,000 annually under the SEC equity crowdfunding regulations.
I don't think that's fair.
So because it's such a new tool, they want to make sure that individuals aren't investing beyond their means. And so if you are an accredited investor, then you have other tools for investing. So the SEC presumes that the SEC holds that accredited investors are more capable of making financial decisions about institutions that they want to invest in. And so they aren't as restricted or regulated when it comes to investing. But with equity crowdfunding, you're going to be dealing with a lot of unaccredited investors. And so the SEC wants to make sure that they're protecting consumers in the marketplace against business activities that the unaccredited investors may not be able to fully analyze from a financial standpoint.
How do I become an accredited investor?
So
that means I have to have a ton of money?
Annual income has to be over, I believe, I believe 200,000 for the previous 2 years if you're an individual, 250,000 for the previous 2 years if you're married.
Okay. How do you think that equity crowdfunding is going to impact the community, positively and negatively?
So, historically, the black community has had issues when it comes to access to capital. And what this does is it presents another opportunity for us to receive access to capital in a very accessible way. Now, if the community does this right, then you're going to have small businesses that are going to jump on these platforms. They're going to get all of their paperwork in order. They're going to have their presence in order. Hopefully, as the pastor said, they're going to engage in upping their financial literacy from a business standpoint so that they can adequately manage the investments that come in. But you're going to see them get the funding that they need in order to replenish inventory, in order to make capital improvements to their real estate property, in order to hire the right people. Capital fuels business, and when you don't have adequate capital in order to get your business up and running, or in order to grow and expand, it can either stunt your growth or it can kill you. So from that aspect, it's going to allow for more money to be infused into the black community for businesses, which is going to increase which is going to foster economic development. So hopefully you'll see neighborhoods improve. You'll see this decrease violence, increase employment. And then from an investment standpoint, hopefully you'll get more people in the black community who are actively investing in businesses around them and looking at investment overall in a different manner. We, as a community and as a culture, do not invest in the ways that we should. And so I'm hoping that what this does is this pushes us to say, okay, well, I need to start investing my money, allow my money to make money for me.
I'm just really curious. This all seems a little bit too good to be true, and I'm sure our listeners out there are probably skeptical as well. Like, all I have to do is go onto this online portal and I can get money for my business. What are some of the stipulations? Like, what are the qualifications as a small business or a medium-sized business or a large-sized business to be able to participate in this?
So one thing that you have to understand is that, one, there's a limit. So you can't raise more than $1 million in any 12-month period. But two, you have to give disclosure. So you have to disclose information about every officer of the company and everyone who owns at least 20% of the company. You also have to have all of your legal documents in order, your foundational documents. If you're a limited liability company, you have to have your operating agreement. If you're a corporation, you have to have shareholder agreements, bylaws. You have to make sure that everything is airtight. A little bit later on, you're going to hear from Jeff Beckham of Black Box Creative. You're going to have all of your digital presence in order. So if you jump on a traditional crowdfunding site, people aren't just going to come and give you money. They have to be compelled to give you money. They have to feel like what you're doing is worthy of their dollars. And not only that, they have to feel like they're going to receive a return on what you're doing. So you need your marketing in order, your legal documents in order, and your financials in order. So you're going to have your financials reviewed by an independent auditor. So if it's your first time using the platform, or the regulation, then you have to have you can use an independent auditor just to review your financials. But if you go on again, then you actually have to have your financials audited by an independent accountant. So it's going to cost a little bit to get on the platform. It's not as easy as just going to jump on. And then once you jump on, you have to get people to give to you, to invest in your business.
Gotcha. So this would have been a great time to have Patty, the marketing mentor, on here to talk about how to best market your business, right, to get this stuff. So we have to have another conversation around after you're on the platform. What are some of the things that you can say and can't say to promote your business, to bring brand and awareness around? And then I'm sure there's some legal things that you can't say either. I'm sure there's tons of stipulations.
Oh yeah, the compliance is going to be huge with this. Not only compliance from the sense of making sure that you stay within the realms of the equity crowdfunding regulations, but just in how are you managing the capital that these individuals are investing. They are becoming part owners of your company. And now you can. Do
we have to listen to them? Do they have to tell us what to do day in and day out?
So a lot of these are going to be very, very small minority investments in the company, and you can dictate the authority and power that you're giving out with these shares of equity in your business. So the majority of the time, no, they're going to have they might have somewhat of a say, but they're not going to have a huge say in which you do. in what you do as a business.
Okay. All right. So basically these are like angels, like almost kind of like angel investors. You know, they just kind of fly high, make sure you're doing everything all right. At what point in time do you feel like, let me ask this the right way. When is equity crowdfunding not good for your business? And what circumstance is it like, hey, this isn't the right road that I should take?
So as with any business raising capital, one, you don't want to raise more than you need. And then two, you want to make sure that you are not overly complicating your ownership structure of your business. So a lot of people want to have an exit strategy. So when you have a bunch of other owners in the business, that makes your exit strategy a little bit tougher, especially if you're talking in terms of an acquisition. And so it remains to be seen how exactly this is going to play out as far as people getting out of their recalling their investment in companies. But what I would say is, if you don't have your house in order, you should not be raising capital.
Exactly.
If you don't know how to manage this capital, if you don't know how to leverage the capital that's coming in order to produce what you need to produce, then don't do it. I would say get your team in order first. So if you need someone for marketing, if you need someone for your branding, if you need someone for
website,
your
legal,
your
accounting, right?
Get your team in order first before you do this, because you will waste an opportunity if you jump on too quickly and you don't know how to adequately leverage this opportunity.
And I'm sure you probably only have one shot, in a sense.
So what's going to happen is, if people go on and they invest in your company and you completely squander their money, you don't do what you say you're going to do, people are going to talk.
Right.
And so the next time that you try and go on, it's going to be harder to get people to invest in the company.
We're going to go to our caller, but after our caller, remember, I want you to tell us more about what guarantees do we have as an investor if, let's say, the business shuts down. I would love to talk about that. But Robbie wants to know, can crowdfunding be used to start a PAC? Robbie?
Oh, good morning. I really find this of interest, and I know that PACs are not directly related to entrepreneurship, but I do know it's an area where the black community needs to start building a pool of money so that we can support political candidates that can help us get the policies for economic development, like entrepreneurship. So I wanted to know, can you start a process of raising funds on the using the crowdfunding process? And if so, what would the steps be? I'll hang up and listen to your response. Thank you.
Thanks, Robbie.
So for creating a PAC, I actually don't think that would be. I don't think that it's expressly prohibited in the SEC in the new regulations. However, again, the question is going to be, you're giving equity in companies. So what does that equity look like? What is the return going to be, and how are you going to compel people to invest? So everything has to have a compelling draw in order to get individuals in. So if you can craft the PAC in a way that is not only attractive from a return standpoint, but from an operation standpoint moving forward, then I believe you would have a shot. And like I said, I don't believe that that is expressly limited or prohibited within the SEC regulations.
Interesting. Well, after the break, we will talk more about crowdfunding as the calls come in, but we will also talk to Tyra Martin, the talk of Chicago, people to people, after the break.